Hey everybody, Corey Schrader, Black Creek Wealth Management. Hope you all are doing well. Wanted to get in front of you here this morning just to kind of give you what's going on for the week, as I will be doing on a regular basis. And again, going to keep this short and sweet, so that way we're all making some money throughout these weeks. So let me go ahead and share some just ideas with you here this morning. So ultimately what I want to focus on right now is just what's going on with the S&P 500. Mostly what we're looking at right now really comes down to the market has been dropping for about 7 weeks, and there's a lot of uncertainty with just inflation and interest rates and how is all that going to play out. So really what I'm going to help you out with today is just the overall sentiment of the market, not necessarily digging into too many specific trades, but I want to show you some of the things that I was looking at and I was doing this week just to make sure that I was watching out for the clients that I help, and ultimately what we should be thinking about as we move on through this week. So the biggest thing is we have an open forum from Davos, which is an economic event that's over in Switzerland. They're going to be talking about what's going on with the economy. Usually when you have noise like that, you're going to see a lot of movement, gyrations. If there's positive news, if there's good sentiment, you're going to see the market rally or really just take off. Sort of what's going on today. You can tell just here briefly looking at the daily charts that the market just really wants to move. And I've been saying this for weeks. We're waiting for some sort of catalyst just to tell us everything's okay, we can move higher. So at any good news, we're going to see this market move. Now, I have reason to think that we're not getting any better here in the short term, maybe the next 2 to 3 months. So I think this is more of what they call a dead cat bounce. We're in a bear market. You see the market rally back in these big peaks to try to show, hey, we do want to move higher, but there's just not a lot of volume, which is really right here. It's pretty low volume so far today. But again, we're only halfway through the session. So when I look at what's going on, you can see, at least with the S&P 500, we're trying to push higher. We're going to see how this plays out by the end of the day. My thoughts is it's going to look more of one of these days where you have really this tug of war between the buyers and the sellers, because no one really knows where this market is going. If you focus on the key things that are coming out, again, it's inflation. Interest rates have really pared back. I was telling clients this back in November of last year. I still believe the Fed's going to land somewhere between 2.5 to 2 3/4 for the year. And we're really on pace to see some of that retracement. You can see really here with the 10-year, it's really just come down a little bit. And again, as people get concerned, they move from stocks to bonds. We've seen correlations or movement of the two the same over this year. Bonds have started to tailor off, so we're adding some more diversification benefits. But long story short, I think this week's going to be a rocky one. The market's really trying to fight today to try to establish some sort of higher level, as you can just tell here. And this is on a weekly basis. You can see 1, 2, 3, 4, 5, 6, 7 down weeks. We tried to fight here, didn't hold, and tried to hammer out the bottom. Looks like a little hammer, didn't work. We're rallied down, came back up. You can see, and we're trying to fight back today. So my hope is that this week we see some movement. I was looking at several levels, and I'll just show you here real quick. So with just where I think the market's going to kind of sit in a range is anywhere from about 4,100 really to about 3,850. We're probably going to look at that, I would imagine, for the next couple of weeks, unless inflation or some metrics come back that tell us that things are going to be a little bit better. So for the trading week, what I would tell you is beware of the whipsaws. And what I mean by that is if you don't remember, Costco dropped quite a bit last week, right? So it had a huge down week. I think it was down 16% last week. And now it's trying to rally a little bit of that back. So be careful when you do, if you are going to be short-term trading this. Now, it might be something to consider long-term. If you're a long-term investor, do your homework, watch the fundamentals. But overall right now, it was oversold. Your indicators are going to read very oversold, but I caution you, the regime has changed on those indicators. So you need to update and you need to be aware so that way you don't get caught with whipsaws. And all that means is the price starts heading back up, but wait, nope, we're really heading lower because Food costs are now going up because of global inflation and all these other things that are starting to play into it. And of course, Biden is talking about going to war with China if they try to take Taiwan. So there's not enough chaos going on right now. So the biggest thing I'll tell you is in the short term, we can absolutely make some money, but just be very careful of these whipsaws. But overall, if you have any questions, as always, reach out. I'm here to serve. And I'll talk to you later. Have a great day.